And welcome, everyone, ladies and gentlemen. I'm your host for this session. My name is Jimmy, and welcome to the sixth edition of our Trading Congress. This virtual trading camp is back. This trading camp is very popular. We started years ago, and because of big demand, we're organizing this, and we will keep organizing this. Congrats for taking the opportunities of this huge opportunity. You will have access while we're having this trading event, this trading congress. You will have access to the best of the best education, the best resources, and the best experts to help you to succeed in this market, because this market is not easy. So join us for this week. Most of the activity, however, happens on Discord. So if you haven't really joined us on Discord, this is the time, because we truly believe the best time is now for the crypto markets, and it's now the best time to fully prepare yourself. So check the description below. In today's show, we have a legend, and honestly, I was a little bit nervous and even anxious a little bit, because we have today Chris from Texas. Hi, Chris. Welcome to this session, this show. How are you doing?
Hey, man, I'm doing great. And man, I'm excited. You and I have been talking online for quite a while, and following along with each other. And when I saw that you were going to be the host of this one, I was pretty excited, man.
Likewise, I had exactly the same. I know who you are, and however, there might be some people who are sleeping on the rock, don't know who you are. Shame on them. But Chris, give me a brief introduction. Who are you, and what do you do?
All right. My name's Christopher Inks. I'm the CEO, founder of Texas West Capital. We're just we're an online trader education company, I guess you could say, is what we do. At the end of the day, our goal out there is to help people get beyond all the half truths and the outright lies that they often find for free online, and help them understand, how and why markets actually move like they do. So I started out as the epitome of the retail trader about 30 years ago. I came in and just threw money at the market for years, and finally figured out, man, if I'm going to actually really be serious about doing this, I've got to actually make money. And when I decided that, I really decided that, I became a student, of the markets of trading, and I started just consuming absolutely everything I could. And so, you have to think, this was back even before AOL had their dial in, their dial up all access, $25 a month or whatever it was back in the day. So, when I first started, I think I was paying, I think about $100 or $150 a month for a physical newsletter that I got in the mail once a month from a guy. And honestly, to this day, I can't even remember who that was. But that, that's kind of where I started, and just kind of as the years have built, just kind of learning more and more. And as I did that, all of a sudden one thing just, it just kind of all fell in together. And I said, oh my God, this is why things are working. And, been doing it ever since. And then started this company about 7 years ago. Yeah.
So people must be lucky that they can learn from you, Chris, because we both know that learning is one thing, and learning something requires a lot of willpower, mental power, and time. It basically wires the brain in such a way that we have these neural pathways. But the problem is a lot of people, including myself back in 2016 and 17, we love to consume free resources, but consuming free resources comes at a very expensive price, because most of it, honestly, is really BS. It's garbage. And unlearning bad concepts, it requires even more energy than learning. Unlearning is difficult, way more difficult than learning. So since I took my CMT curriculum, I really discovered that a lot of concepts that people have imprinted in my mind was actually very bad concepts, and no reason I wasn't profitable or I had a very bad market reading. And talking about market reading, we both know there was a lot of chaos, a lot of uncertainty. We were actually in a range-bound environment for 8 months. Um, and there was a lot of misreading on context in especially when it comes to Bitcoin. Uh, what do you have to share on that?
Yeah, no, I mean, you said it just right there. A lot of, and I try to say this, and it's hard to tell people because there's so much availability of free online that people kind of are really in this mindset that if it isn't free, then how dare you, But the reality of it is, even the stuff that you find that's for free online, without understanding context in what it's doing, you're still going to lose. And that's why a lot of people, they go out there and they'll buy different indicators, or they'll buy different strategies, of which I've purchased. I still do today. I never stop learning. And a lot of them actually work, but without the underlying understanding of the context of what's going on, and just blindly following the indicators or the strategy, you often end up finding yourself losing. And the other part of that is just that, usually when you're a beginning trader, you don't have an idea of what proper risk management is. And even when you do start to get an idea, let's face it, you really don't use it. Once again, describing me when I started 30 years ago, it's the same thing every market, every cycle, the same type of people come in. So when you look at, for instance, I'll go ahead and pull it up here if you don't mind.
Yeah, please.
Oh, wait a minute. I think you have to pull that up, don't you?
I have the power. By the way, ladies and gentlemen, smash that like button for Chris and make sure you follow him.
Yeah. So again, we're talking about this period over here where everybody absolutely insane, lost their minds, right? Top of the cycle, oh my God, we're going down to 20,000. We're going down to 12,000. We're going down. I think I saw somebody claiming breaking $1,000, right? They thought that was it. Now there's a lot of different ways to look at this, and anybody that's followed me over the last, 8 months there, has heard it. They've seen me draw it out because I do apply a couple of different ways of looking at it, Wyckoff and Elliott wave and some price action and volume analysis. But when we got this drop here, this was the August 5th drop. This was the Sunday night into Monday morning here, my time, here in the States. And this was the big, oh my God, it's the end. This is the carry trade unwind for the yen, right?
Yeah.
But was there any context behind it? No, it was just a bunch of fear, right?
Yeah.
Now, structurally here, this drop down, you can see that we have over here, we have what we call a low volume node. And basically that just shows you where there's really a lack of liquidity. All right. And so what do we get? We get the drops, right? We get the kind of the bounce. There's no follow through. And then we get the big one here with a lot of volume that leaves this large lower wick. And so what happens is, had this actually been what everybody was trying to say it was, which was this yen carry trade unwind, which started the Sunday night previous, Then come Monday morning, when the markets opened, right? Because we got this same thing across stocks and whatnot. We would have seen basically limit down. We would have seen the stock markets, hit the triggers on the limit down, because it would have been such a big, strong kind of move down. And instead, what we got was we got it bought back up, no liquidity there, and that was the low that followed on through. Right? And but even after this, everybody was still fearful that we were going to continue down.
Yeah.
And so when
Mhm.
we got to the point we were going to break out, still everybody thinking, nope, it's just going to go up a little bit and that's it. And then, this whole thing is a top.
Yeah.
So
Yeah.
it was just that move, right? There was no real context in what was going on other than, oh my God, we're going sideways. And as you know, the longer we go sideways, the more people tend to start second guessing their bullish bias, and they start being fearful that the top's in. And that just leads to this, just a bunch of emotional decisions rather than really kind of understanding what's going on there.
Yeah, I think we share here really like exact same thought process. I can remember that long week. It was just like 1 2 days before my vacation, uh, and I shared it also with other people we might have here. A huge swing failure pattern, and it's basically that type of price action that causes a lot of negativity bias and recency bias. Often, when traders see a big drop, a lot of emotions, they start to pop up, and especially the negative emotions are way stronger than the positive emotions. Hence, that is a phenomena we call the negativity bias. And on top of that, when people see negative price action, so going down, they naturally assume it will continue going down. But this was a beautiful price action. Also, that false notion about, oh, we see a lower low and lower highs within that range, and basically disregarding that we were actually in a range and giving more weight to that lower low, lower high structure. Was that also like your take on that when Bitcoin was in that range?
Yeah.
And
So
everyone was, Mhm.
yeah, so for me, again, I use two, generally speaking, I use Elliott Wave has kind of given me a guide as to the direction of the trend and possible target areas. And so when we look at this as a 1 and a 2, this becomes a 3. So I was already of the assumption that this was just going to be a pullback and then move up higher. The other thing I generally tend to look at is Wyckoff, which is a study of basically buyer psychology and ranges, distribution, redistribution, accumulation, reaccumulation. And so watching this develop here, where we had the volume dropping off and the structure, and particularly there's areas of which, I mean, it's too much to go into right here, but there are areas you look at in the range. It's not just what is volume and what is the range. It's what points in the range are you comparing with the volume, and what are you looking for? And that kind of tells us what is the psychology of the retail buyer, what's the psychology of what we call the composite operator, and how does that all work in there? And so, I had been talking, that this was the entire time that this was going to be reaccumulation, and the further it played out, the more it looked like it.
Mhm.
Um, and so, for me, just, as usual, a bit of vindication when it finally breaks out. It took forever. So, you get a lot of hate from people that don't share in your understanding of what's going on. But again,
Yeah.
it was the context, right? Because if all you're looking at is this, we made a new all-time high, and then we've been lower highs and lower lows since then. So structurally, you're in this bearish trend here. I mean, if that's all you know and that's all you're looking at, then it makes sense to think that it's going to go down lower.
Yeah.
But again, without context, without understanding, where liquidity is, how the volume is working out there, all these different things, that's what you're going to think. It's going to go down lower. So it's not that we hate on people that, look at it that way. It's just that hopefully going through that and seeing it go up there makes them step back, right? Because you and I both know that when traders start out, well over 95% of them never make it, right? I mean,
True.
in 3 months, they're usually out. Within 3 years, you've got about 3% left that started. And it's not that they can't do it. I'm a firm believer. It's not that people can't trade. It's that they don't know how to trade. You said it great earlier. You said trading is not easy, right? And I say it all the time. It's simple, but it's not easy, right?
Very true.
Price is basically going through points of liquidity. I mean, at the most base level, you're pushing from one liquidity point to another liquidity point, whether it's up or down. But how do we figure out where that is? How do we understand what's going on? That's not easy. It's simple to say it. It's not so easy to do it at first, until you really kind of get into it and you start understanding that if you're just doing things without that context, you're going to say things like, well, lagging indicators. You see a lot of people out there who are pushing, trying to show their products, trying to show their thing, like, oh, well, RSI is a lagging indicator. It is. MACD is a lagging indicator. It is. Mm-hmm. But their insinuation from that is because it's a lagging indicator, it's not useful. Whereas if you understand context and you understand what you're looking for where, then they become very useful, right? They help. Maybe they don't tell you exactly where your tops and bottoms are a lot of the times, but they're going to tell you, listen, are you on the right track with what you're thinking? Because as a retail trader, really the only thing you need to do is to be able to identify the trend, get in it while it's going in the direction of it, and then get out before it's done. And if you can do that, you're going to be so much more successful than trying to, time those events, the absolute top price, the absolute bottom price.
Yeah. That's also the desire for perfection is often one of the reasons why so many traders fail. I recently also talked about it when someone's P&L, its equity curve is, let's say, 1 million, and there is a drawdown and it's suddenly 700K, although he's massively up, subconsciously, emotionally, psychologically, he's actually down 300K, and there's the pain. And then taking profit is really difficult because the anchor is the 1 million.
Yeah, exactly.
Trading is such a difficult mind warfare. Like there's always a war. Even I need to take a step back. I often tell people a step back is progress, because sometimes you're too close to the wall, you don't see the room. And when you take a few steps back, you see where the room is, you see where the couch is, you see where your equipment is, and you have a very good understanding of what's happening. With that said, what's happening now with Bitcoin, Chris? What's your take? It got somehow rejected just below 100K. The futures, it already tapped into the 100K. What's your take? A little pause, or more decline, or are we forming a base? What's your high probability thesis for the next few for the rest of Q4?
Yeah. Okay. So again, we talk about human psychology, and market psychology and trader psychology, and all these things. And one of those things is this affinity for round numbers, right? Tens numbers, zeros. And so I've been talking about the likelihood was one of two things when we come up to the 100,000 area. The most likely idea is that we hit it and we pull back before we break through. Now, the other possibility was, hey, we could break through and then pull back and retest it and then continue on. But here's one of the things I generally, discuss when we're talking about liquidity. So this right here, this thing, in case people don't know, this is called your VRVP. So, if you're in trading view, you can jump up to indicators, VRVP, put that up here with technicals there. Let me try it again, VRVP. Yeah, right there, visible range, volume. And what that tells you is how much volume is happening at a specific price level. This volume down here tells you how much volume, how much trading is happening, volume and trading is happening at a particular time frame. So with this being the daily, this is each day, how much volume is happening. But this, for instance, right here is how much volume happened at 63,000, we'll put it right here, 63,882 and 81 cents. So when we're talking about liquidity, right, there's a lot of liquidity here. This is what we call a higher volume node, HVN, because there's a lot in this area. When you have a lot of overlapping price action, it means the market is accepting that price. It means that people are interested in buying and selling at that level. So you're going to get more ability to actually get smoother movement up and down, as we kind of see through here, right? But you have the low volume nodes here. And these low volume nodes were deep center, you can see it's a lot less volume at these price levels than what we have here. And what does that tell you? Well, that tells us that the market's just really not so interested in those prices. And why is that important? Because when you hit a low volume, a low volatility, a low liquidity area, one of two things is going to happen. You're either going to get rejected from that area or you're going to shove on through it. And so case in point, we can look right here at this range. This was our first range we did, which was about 6 or 7 months long here.
Yeah.
And as you can see, we kind of hit up and then we hit up and up again. And we were hitting into this low volume node here. So what usually happens is when you hit these areas, you'll hit it a few times. There's no, it's not like, oh, definitely 3 times or 2 times, but you hit it a few times. And then all of a sudden you'll pop out through it. And you get that volatility, you get that big move up on, just running all the way through that liquidity because the market's just not interested there, right? So there's not a lot of if you're buying, there's not a lot of sellers in that area. So your price has to chase up higher to find buyer or to find sellers for you to buy from. So that happens there. And again, same thing kind of happens. You can see this right here on this recent range.
Yeah.
Where we hit that low volume node again. And to the downside, we hit a very large low volume node here. So we kind of, again, as I mentioned earlier, just kind of bounced through it. Previously where we'd hit it, you can kind of see that right here. So you were kind of pushing up into it before we even got up there. And so after pushing through it all these times, you'll finally, boom, we push out and we just continue to go through this area where we kind of make this strong move up, right? So I bring this up because these psychological levels like 10,000, 50,000, 100,000 work the same way. So when you're hitting that 100,000, the first thought is, okay, well, it'll hit up there kind of into it and it'll pull back and maybe kind of either just pull back and create a base or it'll pull back and then break out. And so that's kind of what we were looking for there, right? I mean, I talked about it could potentially break out through, but my first thought is always you hit that low volume or that psychological level, you take that rejection, and then you get the breakout through with a lot more conviction. And that's what I think we're doing right now. So, I could see it where we could pull back a bit further, but overall, I think this is just a pullback here, and then we'll break out to that 100,000 with a bit more oomph, more seriousness once we do that. Kind of the same way again that we were doing over here through these low volume nodes, once we finally got through them.
Yeah. Yeah. My general thesis has always been, and it was very similar to the price action, by the way, basically in the same period, funny enough, from March till October, that after a multi-month range or consolidation, you do not expect a classical throwback like a bullish retest or a small move. Because there's so much tension there, and we can also see there that high volume node around range high. But now one maybe could argue that saying, hey, but now we see that low volume node. If we see like a bigger pullback, maybe we could, Bitcoin could easily travel very quickly to that 70K area. What's your take on that?
Yeah, I mean, again, at the end of the day, much like the thought that, that the cycle high was there at that very 74,000 area. I think we do still have a lot higher to go. We've got, and you can get on there with a lot of fundamental stuff. You say, okay, well, there's the ETF inflows, and there's all these things. I'm not a fundamental trader. I could give you what's likely to happen fundamentally based on the chart a lot of times. But, again, the way that I approach it is from this idea that even though I'm a technical analyst reading what the chart says, to me, this chart is telling me what society is basically feeling, right? And so when we look at things like fundamental analysis, where you're looking at maybe government numbers, GDP, unemployment, stuff like that, or you're looking at a business's, numbers, how much they're producing, how much their sales, all this kind of stuff. These are all lagging as well. People talk about technical indicators like RSI being lagging indicators. Well, so are these other things, right?
Yeah, true. Yeah. I mean, the minutes from yesterday were minutes from a meeting from 21 days ago. So, I mean,
Yeah,
that's very lagging, right? 21
yeah,
days.
yeah, exactly. And so we go, okay, well, what is the quickest way we can understand what the market participants are thinking, right? And the quickest way we can understand that is, what are they doing in the markets? Is the money flowing in or is the money flowing out? We're not just talking about retail, we're talking about everybody, right? Because especially when you look at stock markets, I know here in the US, 75% or so, 80% of the volume is not retail, right?
Mm.
Is it's your big institutions and everything, your big hedge funds, all those kind of things. In crypto, it's less, or it's been less. It's been more retail than what it is in the other markets, but still, it's very heavily skewed toward the big money, the professional money, I guess you could say. So when we look at, okay, what are people doing? We don't just mean retail, we mean what are the business doing? Because here's the thing, if the business is not feeling good about the business, if they're not feeling good about the economy, they're going to start doing things with their company that shows up later in those fundamental things, right? The money that they're putting into their companies is going to slow down. The money that they're maybe, are they doing buybacks? Are they not? All these different ways the money's entering the market is going to be different. So, we look at it as, okay, so that we read what the charts are telling us, but the charts are based on, again, that human part of it. What are people feeling? And they're telling us what they're feeling in aggregate by the way in which that they sell and they buy the markets and what's going on there. So for me, again, it's just a bunch about reading that versus kind of looking at, okay, well, what's going on, with all this other extraneous stuff that a lot of people like to point to. Because again, as human beings, we like to have narratives. We like to have stories, right?
Mhm.
It's stories that sell us, whether we're buying something for the house, something we need, or a new car, or even a new house or something, right? It's the story. How can the person who's selling it sell that to us via a story? And it's the same thing when price moves. People look for stories. What is the reason that things are happening? Versus, okay, well, the reason things are happening is because this is the way people are feeling.
Mm.
So yeah. I agree a lot with what you're saying. Coming from that point of where I come from.
Yeah. Also, like I might have like a statement, like, or a thought. Bitcoin performed actually quite phenomenal, to be honest. Like, very good this year. The altcoins, they had their rally very short. It was really short-lived. Um, Altcoins actually underperformed against Bitcoin in March.
Mhm.
I think we both know that the majority is not really exposed to Bitcoin because there's this false notion that Bitcoin doesn't make you rich.
Yeah.
Well, not having Bitcoin actually makes you poor, not only against USDT or fiat, but especially against altcoins this year at least. And we're also seeing a huge inflow of ETFs, companies buying Bitcoin. Last time I checked, 2.8 million Bitcoins have been scooped up by ETFs, companies, even countries. So there's like a huge buying appetite. Likely these 2.8 million Bitcoins will never flow into altcoins. That's my foundational belief, actually. I don't see a country like Salvador selling their Bitcoins for Litecoin, for example, or
Yeah.
someone who consciously bought the ETFs thinking, oh, I'm going to cash out and use that money to buy some other crazy altcoins. Um, because altcoins underperformed, I have the feeling that that negativity, they're forcing that negative view or the negative experience on the chart. Do you think there's any truth in that statement?
Man, you just brought up something absolutely fantastic. And it's something that I was actually talking about at the beginning of the year when we got the ETF approvals. And it was this idea that up until the ETF approvals for Bitcoin, we've always had the same kind of cycle idea that happens, right? We've got basically your crypto bros who are in there, and we buy up Bitcoin and we buy it, and then it tops out, and then we rotate that money into other large caps, into mid caps, and eventually in small caps and micros, and then back into Bitcoin, right? And so everybody's coming into this cycle thinking the same thing. Well, I floated earlier this year, back there in Q1 or so, that we would probably see a different cycle playing out this time because we have the ETF flows. So what we have is we have people buying ETFs for Bitcoin, buying their Bitcoin via the ETFs. They're not selling and cycling into altcoins. So the likelihood was that we were going to see Bitcoin continue to rally throughout the cycle. And then we would see maybe sectors of different altcoins kind of blowing up from time to time throughout it. So instead of there being, a Bitcoin pulls back and altcoins take the lead for a bit or whatever, we were going to see some of this where Bitcoin continues to go up and altcoins kind of catch a bid, along the way, depending, whatever was in there. And that's pretty much what we've seen. We just recently, what did we see the last 2 weeks, right? You saw like XRP flip. You saw ADA run up 100 plus, 150%. You saw XLM, I think was it 600%? Oh my God, XLM was just crazy.
Yeah.
Dinosaur coins.
Yeah, that was indeed crazy. Again, people love stories. I mean, the reason why XLM pumped is because XRP pumped, because the CEO, the one who was behind Ripple, or the other way around, XLM moved to the other, and that's why they move in, basically simultaneously. It's very, very, very funny to see. And Chris, we really should talk more often. We really basically share the same, thoughts and thinking process. Love it already. Talking a little bit about alts. We both know, and everyone knows. I'm not, full disclosure, I'm not positioned, I would say, like 50% almost in Bitcoin. The rest, Ethereum, stables, and then altcoins. Probably the better decision is that I was very heavy in Bitcoin. Maybe the less better, maybe a little bit regret that I haven't positioned myself more into Bitcoin, as altcoins, underperformed. But with that said, a lot of people are waiting for that so-called altcoin bull rally, of course.
Yeah.
What kind of tools do you use to determine, okay, now it's really the time to fully focus on altcoins as a altcoin bull rally is about to happen? Is it like the Bitcoin dominance, or are you more focused on, for example, the quantitative easing as some other people do, or seeing like less quantitative tightening happening, or more rate cuts, or stronger Ethereum, or is it more price action based, checking different coins against Bitcoin?
Yeah. So for me, what I generally do, first of all, liquidity is a huge thing, right? And it's become really prominent. Really started to get some notice as far as the idea that increased global liquidity drives overall asset values higher. Back in the 90s, Michael Howell started that, really kind of got big with that. I think he's got a company called Cross Border Capital, something like that. He does a newsletter now on Substack as well, which anybody, if you're interested really about global liquidity and understanding how it plays into the markets, I get nothing for telling you this guy doesn't even know who I am.
No.
But for educational, I mean, if you really are serious and you want to understand that more than what the kind of very high level basic stuff that you get online, it's well worth the money. I would suggest that you jump on it. But that's the first part. So we talk about liquidity, and so not just liquidity on the chart, but liquidity in general, right?
Yeah.
So
liquidity. Yeah.
Yeah. And there's two ways in which liquidity two real ways in which liquidity flows. Your central bank can print more fiat, which is the way that most people understand it. But the other way is that they lower, in our case, the Fed lowers the Fed rate, the interest rate there, and that encourages banks to also drop their rates and expand who they're willing to allow to take out loans. And because, the banks, when they create more fiat, they're just creating new dollars, right? Or new fiat, whatever your fiat happens to be. And so you have both those ways contributing. So even though, for instance, here in the US, the Fed hasn't actually jumped into QE yet, they're still you would argue that they're still doing QT, quantitative tightening, though there may be some backdoor QE going on well beyond the scope of the show at the moment. But the fact is they're finally starting to lower that Fed funds rate, which is going to encourage banks to lower their rates, which is then going to encourage people to take out credit. And credit is that other part of that liquidity. That's the part where you're creating more dollars basically out of thin air. And so that's the first driver of overall asset value. Now, when it comes to Bitcoin, or I'm sorry, altcoins, yes, overall that's one thing. So because as you get more liquidity coming into the system, people they need a place to put it, and so they're going to get more risky. And so you start with Bitcoin because just about everybody that's heard about crypto has heard about Bitcoin at least. From there, they get in, they start learning about other altcoins and whatnot. Riskier, right? They're much riskier. They're a lot less liquid. They're a lot riskier. But you'll see that kind of flow into there. So when I'm looking at it, what I look at is I don't really look at a lot of that other stuff. I mean, I map out dominance, Bitcoin dominance and all these things. And you can map out, total one, total two, all these different ways. And those are interesting ways to look at it. But what I look for is within a particular, whether it's large caps, mid caps, small caps, micros, I'm looking for similar structures in multiple coins that appear to be kind of, within that particular sector or within that particular market cap. And so I'll look for, and so if I'm noticing that they've generally got the same structure, and I'll apply some, Elliott wave, and like, okay, there's a 1 and there's a 2, wave 2's pulled back, create an accumulation range via Wyckoff. And for me, that goes, okay, now we're loading up for something to come up here. Does that mean we get the full out alt season that everybody's waiting for, that we've always had? I don't know that I necessarily believe that we're going to get that this time around. I think we've had some great moves. We've already had some really huge. I mean, earlier this year, meme coins really just going through the roof. I think we probably tend to stay more with that than some full blown out alt season. If we get an alt season, I think it'll probably be closer toward the top of the Bitcoin cycle. But again, the money that's going into Bitcoin right now that's really starting to drive this is significantly more and more all this ETF buying that's going on. And once again, they're not the same people that are going to buy into Bitcoin and then sell it and then rotate into your small caps. So I think, kind of making this case for just sit around and wait for alt season, I think is going to make a lot of people miss all these things they've already, missed potentially, in waiting for that all off shooting ducks in a barrel kind of alt season.
You said so much, Chris. My mind wants to explode. Especially about like the backdoor quantitative easing. I never really thought about them. I'm not myself like a macro guy at all. I spent yesterday maybe like 1 hour, not even more, to check the FOMC minutes. The only thing I could see is there's still quantitative tightening, pulling out $720 billion yearly. So it's a cap of $60 billion on the monthly basis. Just trying to have that. Looking for clues, right? When they officially gonna head more into less quantitative tightening, like less aggressive, or maybe even quantitative easing. But that's maybe like a topic for the next time, as I believe that a lot of investors can massively benefit from that. And we have here like BC Chris Richfield saying, smash that like button for Chris. And yes, guys, if you're not gonna smash that like button, I'm gonna end this live stream right now. So I'm gonna give you guys 2 seconds. I know there's a lag of 1 second. Smash that like button for Chris right now. And Chris, I share actually a similar thesis with when we're looking at the Bitcoin dominance and using the Bitcoin halving as like an anchor point, as I believe like the Bitcoin halving as an anchor point brought a lot of value to my own analysis. For example, often after a halving event, we see a post-halving consolidation of 160, 180 days, and they tend to be very, very boring. and they easily could also induce like time capitulation. It's very boring,
Yeah.
not so much is going on, and then suddenly you see that bullish price action. And when I plot this also, like the halving on the Bitcoin dominance, it takes more or less 260 days before we really see a decline in the Bitcoin dominance. We have seen it in the second Bitcoin dominance, 250 to 60 days, the Bitcoin dominance dropped. The third one, exactly the same thing. The fourth one, maybe. I tend to believe we might see a drop in the Bitcoin dominance, but I do not believe that we're gonna see the same altcoin rally as we have seen in 2021 or even in 2017 or 2017 for that matter. I think we're gonna see like a different one. I tend to believe that this might be a very short-lived altcoin rally, maybe 2 months, 3 months if we're happy. Uh, of course, these are just like speculation, and it's just my base thesis for now. That we might see like an altcoin rally in Q1 or maybe end of this year. If that happens, my personal plan is to rotate a little bit more into altcoins,
Yeah.
to benefit from that. Um, how often do you use the Bitcoin dominance chart to you know to at least for you to consider, okay, now it's the time to rotate more into alts instead of Bitcoin, other than the other things you have shared? Do you use sometimes the Bitcoin dominance for that matter?
Again, prior to this cycle, I would look at it and use it when looking at the pullbacks. As far as, well, hey, if Bitcoin's pulling back here, we should go ahead and look at getting more into alts. But this time around, I mean, I map it out, for the students at our trading academy, and so they've got it, and we're following a pretty good path right now. Things are kind of hitting exactly where we're looking for them to hit. But trying to use that as for how do we, do we all of a sudden jump into it? I mean, if we're looking to get a decent pullback, it's worth taking a look and maybe finding some alts. But again, I think it's more sector or even I even have a hard time saying market cap related, right? I think it's more sector.
Yeah.
Again, just with the recent, with the XRP, the XLM, the ADA, really getting, everybody getting upset because the dinosaur coins that everybody told them weren't going to do anything are now like, way the heck up where they were. And, this is after, again, earlier this year when we had, kind of the meme coin. So I think it's more of, you got to figure out what's maybe going to go. And then when you get, maybe some decent pullback with Bitcoin, you can look for maybe those particular, look for the sectors that might do a little bit. But for me, I'll be honest with you, man, especially this year. I'm a trader. That's what I do day in and day out. But what I've been really cognizant about telling people, especially this past year when we saw that the ETFs were getting approved, was, listen, even if you're a trader, I think you should at least have a bag of Bitcoin that you buy and that you constantly add to, but you don't trade. Because as traders, we're going to make mistakes along the way. The only guarantee in trading is that you're going to be wrong from time to time. So that means you're going to lose money from time to time. And the newer you are, the more money you're going to lose, the more often you're going to lose it. That is literally the only guarantee in trading. So if we approach trading with that understanding, and our goal is to not only trade, but to hopefully, make our families better off in the future, then what you said earlier is absolutely what we should have in mind, which is people think, oh, I'm not going to get into Bitcoin because it's too expensive and I can't make 50x on it. But as you said, you're actually losing money by not buying Bitcoin. So you should actually be buying some Bitcoin and just putting it into a bag over there and letting it sit there and just letting it build up and do its thing. Trade your other bag. Don't commingle it. Don't keep it in the same wallet, all that nonsense. Make it difficult to get it. Keep it cold wallet, multiple steps to get to it. And that way you can focus on trading what you have, but still with the I don't know what you want to call it here. Not really the support, but this idea that you're going to be okay, even if you screw up your trading. because you got this Bitcoin's going to keep building up. Because at the end of the day, I mean, as price continues to go, I mean, if these guys are anywhere near correct in 15 years, right, or 20 years, and you know Bitcoin's worth 6 million or 10 million, I don't know, whatever it is.
That's a good price prediction, by the way, Chris.
What's my prediction? My predictions. I think okay. So I look at it. You know, I'm old enough, even though I was still kind of young at the time. I'm old enough to remember the Hunt brothers cornering the silver market back in the late 70s and early 80s, and reading a lot about it later because I'm just like an econ junkie and a finance junkie. But you know, so some people brought up that fear. I think there's a different thing going on now. You know, especially if we start seeing, you know, the U.S. government, U.S. states, other governments start trying to hoard up some Bitcoin. In addition to the accounting changes here in the U.S., which I believe happen in January, which will make it really easy for companies to hold it on their books and their treasury. And so, you know, when you look at all that, it's you can look at it and go, okay, you know what? It sounds kind of crazy right now, but listen, I got into Bitcoin in January of 2017 when it was $1,100. I believe that's what it was. And you know, I remember that was my first Bitcoin I bought. My first Ethereum was like $15.97. My first Litecoin was $2 and I don't even remember, $2 and something. And I had bought XRP back there as well. So if people that follow me know my story with that. I bought it 66/100ths of a cent, right? And that was the year that it rallied up. Yeah, that was the year that it rallied up to $3 and some change. But you know, when you're doing that, you go in there and you go, okay, well, it seems kind of crazy that Bitcoin, for instance, is sitting at 100,000. Just what was that? 7 years later, right? That's almost 100-fold. And here in the next week, it could be 100+ fold as we break maybe 110, right? So I'm not one to say, okay, it's definitely not going to happen. But I am one to believe that, listen, you know, when you're looking at how do I provide, how do I maybe jump wage or wealth levels, how do I maybe put my family in a better position tomorrow than it is today? I think your absolute best opportunity for that, even if you're first time buying it today, is Bitcoin. But you've got to have that longer, you know, term look. You've got to have 10 years out or something like that. It's no guarantee it's ever going to do that. But what happens if it does and you miss it? Because there's just nothing else out there right now that you can buy in like that with that potential return. And so I'm not going to give it's going to hit 10 million or 50 million or anything like that. But I definitely see there's room for it to grow. 5 years, 10 years, I don't see any reason why it can't be 600,000 or 700,000. And that doesn't mean it can't happen sooner. But I mean, just thinking out there, or maybe even a million, in 10 years. But I think if you're not buying today, or last week or last year, or whatever, and you continue to think it's too expensive, I think you're really really hurting yourself. As you said earlier, you're kind of missing that opportunity to protect yourself against what's going on with the debasement of the currencies, fiat and whatnot.
Yeah, I mean, over time things will depreciate against Bitcoin, and it also reminds me to what El Salvador did, buying Bitcoin every day while the market was declining, and they really didn't care. They just pursued their plan, and they're now massively in profit. That's their way of dollar cost averaging it in. I think retail people could easily do the same with $10 a week or a month, $100, $200, whatever they can miss to build a portfolio. But just to go back to predictions, we all know that Michael Saylor's bear thesis is, when everything goes bad, is Bitcoin 4 or 5 million, something like that. I don't have that thesis yet, but Michael Saylor is Michael Saylor. It only makes sense if he comes with that kind of target. My bear thesis is 4 or 5 million. what's your thoughts on a potential? And I know we don't really forecast things, but just for entertainment purposes, what's your cycle top for this what's the cycle high for this cycle?
Ooh, cycle high here. So I've talked about this a few times over the last year. I've given a few targets. I think 124, 126 is a pretty doable target.
Hmm.
I think the consensus remains potentially the 160 to 180.
Hmm.
Um, but I think there's especially if we get more of the blow off top that we're used to. I could see it hitting 224, 248. And with the blow off top, depending on how long it takes to set that up, there's a lot of potential height that you can really kind of get in that. So for me, more than previous cycles, I've got those generic kind of levels that I've put out there. Some based on some wave movement,
Hmm.
but it really kind of depends. I think really what'll set the tail for how far we go is how it does between now and the end of the year. And I think at that point, it'll be a bit easier to figure out maybe where that top may be. But those are definitely the levels that I'm looking at. I don't think that 124 is really all that difficult to get there. And then once we get through that, things start really looking interesting,
Yeah.
higher. But I don't really have like this is definitely a cycle target. I'm not great with here's the target, here's the timing, all that kind of stuff. I'm
Yeah.
really good at just kind of being in there and trading along the way.
Yeah, I fully understand that. I do myself have like a few ideas, like just have you just use them as a potential clue that can happen. Just applying a simple time analysis and some easy tools to determine like a potential target. My target is around 170, 180K. But we all know how markets can be. They can overreact very heavily on things.
Yeah.
Crowd buys, mentality herd buys can kick in, and it could even push the price even higher. But 170, 80K is, if we're going to get there, that's definitely a place where I want to be extra cautious
Yeah.
for this cycle. Chris, you're an absolute legend, as Burp here is saying. I think everyone enjoyed really this show. We should do this more often. Even I learned
Definitely.
here a few things. I still have a lot of questions about your pivot strategies. The way how you see quantitative easing and that so-called like background quantitative easing. There's so much we can catch up on the next time. So many follow-up topics we can discuss. Ladies and gentlemen, give Chris a massive shout out. Go and follow him. If someone can drop his Twitter handle here in the chats. If someone wants, please drop his Twitter handle in the chat. Give him a massive follow. Chris, thank you so much for sharing your wisdom with us. I know you have some gray hair. I often say people with gray hair, they have a lot of wisdom. And today you have truly shared some great wisdom with us. Thank you so much for that. Ladies and gentlemen, as you guys know, we have an ongoing program for the rest of the week. So make sure you guys follow the Burp Nest, you follow the Crypto Burp, and all the real magic actually happens on our Discord. So go to our Discord. There are a lot of resources available for you. Position size tools, trading psychology, write-ups, setups, trading ideas. I shared recently a meme, very risky. I know I'm also a little bit into the memes. I cannot ignore them. There's some fundamental calls. Make sure you check out the Discord. It's for free for at least this week, maybe next week as well. I'm not sure about that. It depends how generous Crypto Burp is. Ladies and gentlemen, again, thank you so much. And Chris, I will be more than happy to have you again in the next live stream very soon. Thank you very much.
I love it, man. Thank you guys so much.
Bye.